Hey traders, welcome to Alchemist and Knights. This is where strategy meets simplicity, your guide to mastering the market with clarity and confidence. Let's get started.
Welcome to another new video based on the Alchemist and the Alchemist strategy Malaysian SNR strong key levels under the pull course of the Malaysian SNR courses. So guys, in our last previous classes we have done the 01 lecture, 02 lecture, and here comes the 03 lectures. So we have treated a lot, and as from now I will just assume you guys have passed the knowledge I've shared with you. You can now identify the structure of the market. You can now identify the market range and stuff based on what we have treated. Let's just dive into the video. I don't want the video to be long. You can go ahead, subscribe to this channel, watch the previous videos if you want to understand this. I'm breaking things for beginners step by step so that you will all understand it. So the Malaysian SNR strong key levels, Alchemist and Knight is just the channel name. So when we are talking of key levels, we are talking of a place, a specific area whereby if the price reaches the area, it will escape from it immediately. So in this case, this is our key level. This will serve as our key level. So reason for that, price reach this place from the first starting point, it touches it and it escape to the area, it moves again, touch this area, same area, and it still escape. It's escape harder. The next time it breaks and still keep retesting the same area several times. So this is what key level is. I'm going to teach you guys how to position yourself on these key levels, how to find the price levels that you will take your sniper entries on them. So key levels, I'm just giving you the introduction for now. Before we just dive deep into the video, I'm going to explain everything for you need to know about key levels regarding the Malaysian SNR strategy. So there is a one rule you guys must have it at the back of your mind, which is any time the price touches a key level and you marked that specific area, the price bounces back, and this area you are expecting the price to touch the same key level and bounce back, then the price failed you and invalidates your entry, breaking this with maybe consecutive candles or a strong Marubozo candle, or it just break it with a confirmation that this key level is now turning to from resistance to support, because now it is going to support, not to resist. To sell is to resist, and to hold on for buys is to support. So breaking key levels, resistance broken into support and support broken into resistance. This is same example as this. And the price is bullish and you are waiting for your entries around this place for the market to come and bounce back. Immediately after it bounce, then the second entry, you also tap your entry around this place, expecting the price to bounce higher, but the price break and retest the same area. This key level is not longer a support. Around this place it was a support, but when it comes to this place it is now resistance. That is just the basic of the key levels. So types of key levels. When we talk about the type of key levels, we are referring to as the forms, like the types in which we identify key levels. I think it's here. The type of key levels. So we have the B-shape key level. Number one, we have the B-shape key level. This B-shape key level, like this, is the mixture of two consecutive candles on the higher time frame. You are expected to see something like this. With their opening at the same places. So this place serve as key level. And if you turn it to the line chart around this place, if you turn your chart to the line chart, it is going to give you key. It's going to give you the V shape. Right. So this is it. This is for the bullish. Key level is what? This is an engulfing with their opening at the same place. They are open at the same area. It might have some wicks above and below them, but that doesn't matter as far as the body of the candle closes at the same place. This closes here and this opens here. That is it. Because normally our bullish candle and our bearish candle doesn't open at the same places. They open opposite and they close opposite. So for our bullish candle to be bullish, it needs to close above, and for our bearish candle to be bearish, it's supposed to be need to close below. So this is our bearish candle closing below, and our bullish candle take over the trend, breaking the high but opening at the same area. So this is a support. The V shape is the support. Then we have the A shape, which is serving as the resistance. A shape serving as our resistance. Right. So we are also going to mark the height of it. This is also our resistance, and this is also two consecutive candles. The opposite of that. This is a bullish engulfed by the bearish. The opposite of what just happened around that place. Then the height and the height serves as what? Serves as key levels. They serve as key level. Also, they might contain their wicks. Doesn't matter. Right? So that is it. So how did you take trades when this comes into the key levels? You are expected to, once you mark your key level, you will expect the price to come and tap into the key level a little bit, then bounce higher to the external range liquidity. I've told you guys from the previous lecture that the price bounces from what? Internal range liquidity up to the what? External range liquidity. The market seek for liquidity. So in the higher time frame where you build your bias, where you got these key levels from, the key levels are needed to be found on the higher time frame, mainly the 4-hour, right? The 4-hour, then weekly, daily, and monthly. That is where you can go and build your bias. So these candlesticks like this, you have to build them from the higher time frame, your entry one time frame lower ahead. So let me just give you guys some more example of how liquidity of how the key levels also function, because key levels are of different form. There are some advanced key level. You must have heard of it. Some do what? Reversal. Some of the reversal. Right? QMR. Then two bounces up. So in this time, where does our key level reacted from? This place. So this is where it gets even more interesting, because how would you build your bias on this? How did you know that? Because we have so many key levels around this place. How did you choose the right key level where the price bounces from? Which is what I'm going to discuss with you here on this video. This is the QML. The price gives you what supports in this place. Then this is your liquidity sweep, and the price break structure rotation, confirming the price to go up. And what next? Here, this key level will serve as a strong key level. I'm going to explain what you will need. This is just for you guys to be familiar with how the system works. So I hope you guys are jotting it on paper. I'm going to give you the next one. The next type of the next type of the key level, we have the OCL key level. What? OCL key level. Let me just use bearish as an example. This is called the OCL, price open and close at the same area of liquidity, right? Price open and close at the same place. It might have also its wicks, but the candle body aligned with each other immediately as the price open, the price closes, and that makes it key level. What you are expecting the price to give you in this place is that the price will definitely come back to this zone, test it a little bit, give you some change of corrector, that is what you call it, then it will move, bounce, and take the external range liquidity. So these are the main type of the strong key levels that works on the Malaysian SNR. So now let's get to the advanced arm. But before then, just have a look on this. This is very important. This QMR is very important because I'm going to explain how to take and why not to take the entries with all of the key levels. Key level, for a key level to be valid, for a key level to work and give you what you need, it has to do 3 to 4 things. The first thing, let me just write it for you guys. The first thing to look for is total soup, what the ICT call it, total soup or liquidity purge. Yes, that is the liquidity sweep. So you have to find your liquidity sweep. Then break of structure. Then your what as your inducement area. Alright, your inducement area. So let's put this thing into an action. Let's assume this is a key level, any of those key level I've mentioned, and the price is approaching the key level like this. You are waiting for the price to touch this key level and give you some reaction to the downward. The price should test back like this, goes directly, and then what next? It will bounce back. What I'm trying to explain in this place is that the price will clear what? It will clear some liquidity area before it moves to this. Let me not confuse name, use the same as I use this. The same as I use this, since I asked you guys to hold on this, let me just give you the example on this. Price comes like this, it gives you a key level, and let's say you've marked it, right? You've marked it, then it breaks it and it went back again. So since you know this key level is already, it has been broken and already broken again, it will hold the price for you. Where are you going to take your price to? You want, if the price comes like this, it will still break it and go down. There is a high probability of the price breaking it again. Why? Because this broken space was broken because of something. This place broke like this because there was not any liquidity inducement around this place. So the price will use those buyers, those early buyers around this place. The price will use them as the inducement. This place is a key level. It has been marked like this, waiting for the price to come and bounce back. But it pressed down because there is not any inducement around this place. But what to expect from the price is, this is also a key level, but the price is not coming to this because this key level already, it has not been used. It has not been used, and I told you if the price touch break, it turn to resistance. Also, there is no any inducement level in this place, and it breaks down again, it breaks it up. So in this time around, also if you didn't see something like this, don't take the trade, right? If you didn't see something like this, don't take the trade. This will now serve as your inducement liquidity. So the price failed to take this because it doesn't have any inducement area on it, so it fails. And when it is now coming to use the same area as support, it now leaves some inducement area. So this will now serve as a strong area. So this always invalidates users. This also, or it always invalidates because it doesn't have any liquidity area in it, and this always work. So how did you know what, how did you place those three things I've mentioned into an action? This is your liquidity sweep around this place. Alright, your first your last recent break of structure to the downside that was broken, it is now your liquidity sweep, and this is your break of structure. This is your break of structure, and this is your inducement. So the price have put all of those things I've mentioned into an action. So let's alright, so let me just show you what I've said. This is what break of structure. This is break of structure. This is liquidity sweep, and this is what inducement, then price retested the same place and bounce back higher. So that is what I say. Liquidity sweep